Interest rates finally dropped. But where are all the buyers? Today we're going to jump into the exact topic. I'm Mike Fiebernitz with REMAX Southern Shores here in Myrtle Beach, and today we are going to talk about how the interest rates have dropped from 7.25% all the way down to 6.25%, which we all have been waiting on. But the buyer boom we were expecting isn't happening. We're actually going to take a $400,000 house and apply it to a 7.25% interest rate before the interest rates drop. And then we're going to apply it to the 6.25% interest rate. And we're going to see what kind of savings these buyers are seeing. So first, the 7.25%. Before the interest rate, you're looking at about $27.28 a month. That's just principal and interest. A 6.25% interest rate, you're looking at $24.68 for a monthly payment. That's only a savings of $265 a month. Helpful, sure, but not the game changer we need for all the buyers to rush back into the market and buy. And then you add in insurance, property taxes, and possibly HOA fees on top of that. Now that $24.68 just rose up to about $3,200. Even with lower rates compared to the last year and a half, pricing still remains high, and a lot of sellers are actually holding firm or trying to hold firm on their pricing because they're waiting for the interest rates to drop so the buyers come back to the market. But unfortunately, that has not happened. What buyers are doing is they're running the math, adding it up, and realizing that the affordability of buying a house hasn't changed that month with this full 1% drop in interest rates. And on top of that, especially for the Myrtle Beach market being a very tourist-driven economy, wages do not match the pricing in certain markets, especially the Myrtle Beach market. So if buyers don't have the wages to buy these high-priced houses, then they're forced to wait to see if the pricing comes down. They've seen the ups and downs of buying during the peak, and they just don't want to make the exact same mistake a lot of buyers have made in 2020 through 2023. There's horror stories out there where buyers bought a property in 2022, and now they're trying to sell it, and they can't because they're upside down with a mortgage, anywhere from $20,000 to $50,000. Others are waiting for the rates to drop or move into the high fives before they make a move. For sellers, here's your reality. The key is pricing strategically. There's buyers still out there buying properties. They're just very choosy. Homes that are priced right and show well, meaning no roof replacements in the future, HVAC replacements in the future, anything like that, they're selling. Homes that are grasping at pricing from 2022 or 2023, they're just sitting, not even getting a showing. So yes, rates have dropped, but affordability and pricing are still major hurdles and issues with buyers. If you're a seller or thinking about selling, you could still sell in today's market. You just have to price your property strategically so you're ahead of the market, not behind it. If you're a buyer, this market still has a lot of opportunities. As long as you're prepared and know your numbers, you'll be able to find those opportunities. I'm Mike Fiebernitz with REMAX Southern Shores here in sunny Myrtle Beach, South Carolina. If you enjoyed this video, hit the like, subscribe button so you're notified of my next video. Thanks for tuning in. See you guys in the next video.